Hi, this is Indraneel and you are watching Business Bites on our channel, The Spotlight Beyond Profession, India's first online business news channel. In today's Business Bites, first news we have, Mankind Pharma will make their consumer brand business into a wholly owned subsidiary. Second news we have, new company registration has declined by 21% while LLP registrations up by 8%. Third news we have, Dr. Reddy's, MCure and Hetero Pharma to make Gilead's HIV drug. Fourth news we have, stockbroking company Dhan registered profit of 155 crore. And fifth news we have, venture capital firm PeakXV has downsized their funds by 16%. In first news, India's one of the most talked pharmaceutical company, Mankind Pharma, will separate their OTC business into a wholly owned subsidiary. Mankind Pharma has entered into OTC, that is over-the-top business, in 2007 and they established brands like Manforce, Health OK, Prega News, Acne Star, Unwanted and GasoFast. Out of these brands, 4 of it ranked number 1 in their respective categories. The OTC business of Mankind made revenue of 706 crore with an EBITDA margin of 19.9% in financial year 2024 by contributing 7% to the company's overall revenue. The company is aiming to increase the consumer business contribution to 15% of the total revenue in the long run through dedicated focus and better capitalization as a subsidiary. For the June quarter of 2025 financial year, Mankind Pharma has posted revenue of 206 crore with an EBITDA margin of 19.5%. The company got listed in stock market in May last year and till time has given 85% gain in their share prices. In second news, new company incorporation numbers declined by 21% in September as showed in latest Corporate Affairs Ministry data. On the contrary, the registration of limited liability partnerships, that is LLP, has increased almost 8% year-on-year and maintaining an increase in month-after-month numbers. The robust services trade prospects, both in domestic and international, over the medium term have kept the LLP registration number high. A total of 34,021 LLPs have incorporated in the first half of this fiscal, which is up by 23% compared to last year. In company registration numbers, the data showed 11,109 including foreign firms were registered in India in September 2024, which is 24.4% less than the last year company registration number. A total number of 88,130 companies were registered in the first half of this fiscal, which is down by 5.6% compared to last year. In third news, Dr. Reddy's, MCure, Hetero Drugs and Melin got licensed to make HIV drugs of US drug maker Gilead Sciences. Gilead Sciences has signed a non-exclusive royalty-free voluntary licensing agreements with these companies to make and sell generic anti-HIV drug lenacapavir in 120 high-incidence resource-limited countries. Presently, lenacapavir is approved in high-income countries for treating multi-drug resistant HIV and it priced at over $40,000 annually in the US and is also under investigation for the prevention of HIV. In the US, the drug is indicated for the treatment of HIV type 1 infection in adults with multi-drug resistant infections failing their current antiretroviral regimen due to resistance, intolerance or safety considerations. Gilead Sciences first launched lenacapavir under the brand name of Sunlenca in the US and Europe in 2022, which is a first-in-class HIV-1 capsid inhibitor. In fourth news, stockbroking startup Raise Financial Services, which runs trading application Dhan, has registered a profit of 155 crore. The company and brand Dhan has reported gross revenue of 380 crore for financial year 2023-2024, which is up by 600% from 54.2 crore in the previous financial year. The Mumbai-based startup founded in 2021 by Mr. Praveen Jadhav with this revenue number has reported a net profit of 155 crore for financial year 2024 compared to a net loss of 22 crore in the previous fiscal. Till time, Dhan has raised around $22 million from investors and presently they are engaged in talk with private equity majors and sovereign wealth funds to raise fresh capital of around $100 million. Dhan is also planning to expand its offering in the margin trade funding business and in building new revenue generating products. And in fifth news, venture capital firm PeakXV Partners has downsized its 2.85 billion US dollar firm by 16%. PeakXV Partners got split last year from Silicon Valley-based heavyweight Sequoia Capital, and besides resizing the fund, company has decided to reduce the management fee it charges from limited partners, that is LPs, to 2% from 2.5% on the overall size of the fund. They will also slash the carry, that is profits from exit, to 20% from the current 30% for its growth investments, while the management fee and carry will remain unchanged at 2.5% and 30% respectively for seed and early stage venture investments. The development comes at a time when the Indian venture capital, that is VC industry, is undergoing a reset as pressure to show exits and cash distributions is at an all-time high. Most VC funds in India were established as affiliates of US venture capital firms in the early 2000s after the dot-com bust. So these were the top 5 business news from Business Bytes in our channel, The Spotlight Beyond Profession, India's first online business news channel. So thank you very much for watching Business Bytes and signing it off.